tuning in to Beyond the Resume, the podcast that brings you the impactful stories of real estate leaders across the United States. Every year, we take the time to bring you some of our favorite interviews from seasons past in our summer series. These episodes hold tremendous lasting value to you, our listeners. So sit back, relax, and enjoy this Beyond the Resume Summer Series throwback. And don't forget to like, share, and subscribe to Beyond the Resume.
Today we have a very, very special guest, a legend in the housing space, Mr. Kent Colton. Kent is, well, you've so many accomplishments, Kent. Let me try to read through them here. Now you're the president of Colton Housing Group. You are a American Scholar on Housing. You were appointed staff director of President Reagan on the Commission of Housing. You were the EVP over at Freddie Mac. You were the CEO of the National Association of Home Builders and king of everything housing in the U.S. I think you were appointed once, right? Now, thank you. Honor for you to be on the podcast. Thanks for coming.
It's great to be here. I also spent some years at MIT as a professor and
Oh,
at
yeah. I didn't even
Young
go into the
University.
professional
So,
stuff. Yeah. Harvard
so
and MIT.
no, you don't need to do all that, but that's fine.
Name every good university, and you're part of it. Well, thank you for coming on. What are you doing here? That's the question.
I'm talking to a brilliant broadcaster who is famous in housing.
Thank you so much. Welcome. How are you?
I'm doing well, thank you. It's beautiful here where I live in the Washington, D.C. area. 75 degrees today.
Oh, I heard it's nice. Yeah, I do a lot of work with firms back in New York, and they're all telling me it's nice. I'm up in the Northern California looking out the window. It's a little chilly and rainy. So, it's unusual when the weather's worse up here than it is back east. But I grew up back east, so I earned my, I went through it already. Well, cool. Thanks for coming on. We could talk this could be a 3-hour long podcast if we wanted to, but it won't be. So you are, I guess let's talk about the Colton Housing Group. Can you tell us about what you are doing now?
I do a range of consulting, working in the area of housing finance, working in housing policy. Most recently, I've been involved in a very interesting project where I've been the, if you will, the chairman of the advisory board for something called the Ivory Prize for housing affordability. And
Nice.
so,
Tell me about that.
You want to hear about that?
Yeah,
Okay.
please.
About 3 years ago, I was finishing a volunteer assignment, and I got a call from a fellow by the name of Clark Ivory, who's the CEO of the largest home builder in Utah, Ivory Homes. And he's done a variety of things. We've known each other for years, back to the NAHB days. And he said, I really think there's a lot of interesting things going out in the world now as far as innovation related to the housing affordability challenge. The bottom line and the context of this is we have two serious problems in the country. We have a shortage of housing, and we have a real housing affordability crisis. And then coupled with that, obviously, the pandemic has only made it worse. But this was 3 years ago, and he said, I want to go out and I want to start a prize related to housing affordability to see if there's innovation going on, because I think there's a lot of it.
Mm-hmm.
And so after thinking about it for a while, I said, I'd be delighted to help you do that. So 3 years ago, we set up the Ivory Prize for housing affordability. Clark has put up a nice amount of dollars to help make it happen in terms of giving prizes to the winners.
Gotcha.
We recognize 3 areas, and they're sort of, the boundaries are a little bit loose, but it's construction and design, finance, and regulatory reform, really policy kinds of things, working with state and local governments, that can make a difference related to housing affordability. And the first year we set it up, this was back in 2018-19, we had 126 nominations.
Oh, wow.
And they were from 28 different states. The second year, there were 168 nominations. This year, we're just in the process of going through the people that have been nominated. And even with the pandemic, there are 160 nominations now from 37 states and Washington, D.C. And what we've discovered is there's just a lot of really interesting things are happening out there at the grassroots level. They're not going to there's no one magic solution for housing affordability.
Mhm.
And obviously, the shortage of housing is something that's going to have to be dealt with in a lot of different ways. But the bottom line is there's a lot of interesting things that are going, startups, tech companies, other people that are really trying to do things that will make a difference.
Are there some
And
highlights? Anything that you're like thinking like, wow, that's really amazing? You don't have to name them specifically, but are there some examples of what?
oh yeah, I'll give you a couple examples in each of those areas if you want.
That'd be great. Yeah.
Let's start with what could be one of the most important, and that's the area of regulatory. Um, if a lot of people don't realize that, but 25% of the cost of a single family house is due to regulations, building codes, zoning, all the other kinds of things that a builder has to do if he's going to produce a house. In the multifamily area, it's even more. It's over 30%. So one of the areas is really, how can we reduce the cost of housing by removing barriers at the local, state, and federal level uh, to really allow more homes to be built and apartments to be built and to reduce the time and cost of building.
Mhm.
And although it's only a small piece of what's happening now, but there's a lot of interesting work that's going on where houses are being built in factories. And in the first year, we had a nomination that came from California. You may have heard of them, Factory OS. They build
Okay.
multifamily housing. They're in Northern California, and they basically can build a house 25 to 33% faster, so it can go up, and time is money if you're doing housing
Hmm.
construction, and really produce it for 25% of the cost.
Oh, wow.
And it's built in the factory, and then they'll go assemble that multifamily house uh, in you know various areas in Oakland and other areas in California.
Why aren't
And
we using that now? Is it just waiting to be adopted? Are people stopping it? I mean, home builders trying to stop that from happening or what's
it's one of these things that's going to take time because first of all, the main reason is even if you build it in a factory, you still have to get approval at the local level.
Hmm.
And you have to get zoning approval. You have to do all of those other kinds of things. So this is the construction area. Um, but what's happening is people are realizing that if I can build something faster and if I can do it with greater quality, that this is going to make a difference. And it's probably going to be more important in multifamily housing than single family housing. But Factory OS is really doing some interesting work. And last year we recognized a single family builder by the name of Integra, also working in California and in other areas where they're building houses in a factory and it's making a difference. So that's one example in the area.
Prefab? Isn't that called prefab?
It prefab is yes, or modular,
Modular. Yes,
but
yes.
but really I think more appropriate now is factory built.
Factory built. Okay. Gotcha.
Because the point is, if you were trying to do an iPhone and build it on site, obviously it could take you a long time to assemble that. If you can actually assemble it, get parts ahead of time and build it in a factory and then assemble it on the site, that it makes a difference and it could work. Now it's still only a small piece of what's happening, but what is happening is building companies are beginning because of that, and because of the possibility is saying, all right, I may not do a factory built house, but I'm going to buy my wood pre-built, pre-constructed, pre-cut,
Mhm.
and that kind of thing is beginning to make a difference, and more of the housing world is moving in that direction in terms of trying to be more effective in terms of the way they do it. So that's construction and design.
Love it.
In the regulatory area, that's where I was starting. But in the regulatory area, uh, last year, and we recognized both the state of Oregon and Minneapolis, they did away with single family zoning.
Okay.
So so in Minneapolis,
Yeah.
in every place that was single family zone, now you can build up to 4 units
That's
on that
awesome. I wish they did
particular
that
lot.
in San Francisco. That'd be nice.
And there's beginning to do that. They're talking about doing that in Sacramento,
Yeah.
and they're looking at that right now. So if you're dealing with the biggest issue, and that's what I was talking about, 25% of the cost of a house is the regulatory side. If you can do away with single family zoning, and it's a great thing, obviously the builders love it and realtors love it, but home builders like it too. People that can get a house that costs a little bit less, and you can build a 2 unit or 3 unit or 4 unit where you had single family housing. So there are some real benefits as far as that goes. Uh, but it also, what we've realized with all the concern about social justice and the fact that zoning is probably one of the most discriminatory things around as far as housing is concerned.
Hmm.
And so this really gets at both adding to the supply of housing, but it also gets at issues of discrimination and who has access.
Yeah,
So
when I mean, I'm from New York, and so I'm used to a city a certain way, and then I moved out of California or the Bay Area, and there was no like everything was single family. In New York, there's not a lot of single family in Manhattan, right? So it was a big change, and like they're saying, "Hey, we got such a shortage of housing." I'm like, "Well, because you where usually you could have 30 apartments, you have one house, so I can see why." So that's I love that change.
yeah,
Uh,
no, I think so. So that's an area, in the zoning area. And then finance, the winner of the Ivory Prize last year was a company called Rhino.
yeah, yeah,
They're
I know
they're
that. Yeah,
centered in New York, okay?
yeah,
You're aware of them.
yes, I am. Yeah.
But what they're trying to do is to make housing work for renters. And the big issue and problem for a lot of renters and able to get into a place is, what they're required to pay
Mhm.
in terms of, you know, what they have to put up. They have to put up a month's rent, 2 months, 3 months rent,
Yes.
and that can in New York, it can be 7, $8,000, to rent a place. What Rhino has done, and you sounds like you're familiar with them, is they basically said, why do we have to put up all of this money to rent a place? Let's get an insurance policy that will guarantee the landlord
Hmm.
that if something happens, if they trash the apartment or whatever, they're covered with an insurance policy, so we don't need a large deposit. So, instead of a large deposit, you're paying, a few $100s a month that go
Yeah, that
towards
makes
the
sense, yeah,
which
especially if
makes
you're
a lot of sense.
younger. I mean, I remember renting an apartment in Manhattan when I was a kid, yeah, I mean, I didn't have that money.
That's right. You didn't have the thousands of dollars to come up with the house. So if you can cover the deposit with an insurance policy, it makes a difference. So Rhino is one of those innovative companies in the finance area that's making a difference.
So
Another is rent to own. One of our
mhm,
winners is Home Partners of America,
okay,
and they basically buy houses and then they will rent that house
mhm,
for a 5-year period to somebody who can, in essence, rent it. But while they're renting it, they can, prove themselves in terms of being able to make monthly payments, do all of that same, improve their credit, and then they can buy that house, uh, and that makes a big difference in terms of their ability to stair step from being a renter to an owner. So lots of interesting things that are going on.
that's amazing. Thank you for sharing all that stuff with us. Where did your passion for housing come from? Like, tell me about, we don't have to talk about everything, but like, where'd you grow up? Like, why did you become an expert in housing?
Uh, it's interesting. I grew up in Washington D.C., moved to California when I was in high school, and then went to Utah.
Okay.
Sort of followed my dad around when I was a senior in high school. Went to Utah State University, but I got interested in the area of kind of the public sector
Hmm.
and went back to Syracuse, where I got a master's degree in public administration. But while I was back there, I began to get interested in housing issues and ended up applying for a program in the Department of Urban Studies and Planning to get my PhD at MIT,
Okay.
which I was able to do, and that got very immersed in housing and housing policy, and especially on the finance side of housing. And
Okay.
so that passion really developed when I was a young graduate student. And then after I graduated, went out and worked for the Boston Redevelopment Authority for a couple of years. I was fortunate enough to be selected as a White House Fellow and came down to Washington, D.C., and worked for a Secretary of the Treasury, a fellow by the name of Bill Simon, and got very much interested in housing finance and all of the things that were involved in that. And one thing led to another. And so that's where my passion evolved. Came back to MIT and did some writing in that area, talked about different alternative mortgages, talked about other things. And one thing again led to another. And next thing
Very
you know, I was working at Freddie Mac and creating mortgage-backed securities. So there you go.
What? That's amazing. Since you've been doing this a long time, have you seen certain trends over the last number of years? Like, since you started, like, what are the different? Have there been different like phases in the U.S. housing, and like, where are we now in there?
We're in the housing shortage phase, and the reality is that's very different. I mean, that's a good point. People say, what's the dominant thing that's going on now is affordability, and that caused by a shortage of housing. But there have been a lot of times, when we were building, we're now building because we're now building more houses due to the pandemic and a lot of other things and demand being up. We're building 1.5 million, 1.6 million. Before the pandemic, we were building 1.2 million. After the housing crisis, we started building, we got way down to 700,000, but we've had periods of time in housing
Hmm.
where we were building 1.5 million to 2 million housing units a year. When that kind of housing is being built, we did not have a shortage of housing.
Yeah.
And basically it was, inflation and other things would impact housing, but things were, since World War II sort of went along, but we've had two big bumps
Hmm.
that have happened of recent. Number one is we had the Great Recession, which was brought upon by, sort of too much money for housing and people, in fact, speculating too much in the housing market. And for the first time in 40 years, the price of housing come crashing down. And because of that, we then produced fewer housing units. This sort of all started, if you will, back in 1967. Excuse me, you know, uh, in 87, 88, but in terms of the housing crisis, 2007, 2008, 2009, and housing starts dropped way back. So therefore, we were not producing enough housing, and literally, according to estimates by the chief economist at Freddie Mac, we basically based on household formations and then the number of houses that were being built, we got behind by 2.5 million houses. And we were building 300,000 units a year less than we ought to be building.
Why were we building less?
Because coming out of back in the housing crisis,
Mm.
if you remember, the big problem was there was too much money.
Yeah.
And people were getting 120% of the value of a house. People said, "Oh, housing prices will never drop." All of a sudden, we ended up with subdivisions that were basically owned, but nobody was living in them, and
Yeah.
we had this great housing crash. And of course, the backing financially crashed. Freddie Mac and Fannie Mae went into conservatorship. And so all of a sudden, we went from building, close to 2 million housing units a year in 2005, 2006 to building 700,000 units a year.
Mm-hmm.
And that's where the shortage began to occur. So when we get to 2017, 2018, 2019, we're in a real problem in terms of shortage of housing and therefore housing affordability problems in a big time way.
So you think it's like an overcorrection type of thing?
Oh, yeah, that's what happened with the housing crisis and with the Great Recession. Obviously, we were building too much housing. Then the trend was we're building way too little. So now what's happening is we have this housing shortage, and the pandemic has just aggravated that. For those at the lower end, obviously, can they afford to pay their rent if they're out of a job? Concern about evictions. Um, or, alternatively, if you've got money and you're now living in a pandemic and you're spending all your time at home, all of a sudden you want to move to a different place because I no longer have to worry about my commute.
Mm.
And so, that's sort of created even a greater demand during the pandemic, and a classic case of haves who are out there bidding up the price of housing. And we've seen incredible rise in house prices. And then you have the have-nots, unfortunately, who are, barely able to support themselves and they're concerned about being evicted.
Is that gap becoming wider?
It is.
I mean, I have
And the disparity is great for minorities as well, too, as far as the home ownership gap.
spent time in Europe. I have family who live in South America. That seems to be the way it is. Like there's like really rich people and there's like poor people and there's not much of a middle class. And that's kind of what is that what's happening here in the US?
Certainly, you've seen some real divisions, if you were. I mean, again, going back before the Great Recession, the homeownership rates were rising. Homeownership is a great way, and those they were rising certainly for the white population, but they were rising for African Americans, they were rising for Hispanic. And that's one of the greatest wealth builders, where
Mhm.
people buy their house and then they have the ability to sort of accumulate wealth and their net worth goes up significantly. Um, so we were moving in a good direction. But then when the Great Recession occurred, that sort of knocked everything, off its off keel, if you will. Homeownership rate, you know, was all the way up to 69%. It dropped all the way back to 65%. But the homeownership rate for African Americans dropped back to 50%. And significant problems, significant issues, a significant gap in terms of both a racial gap as well as a economic gap in terms of who can afford to buy a house. So what you're seeing right now is in fact a greater disparity in terms of that issue.
Was there ever a time you hear about, oh, the good old days when, I mean, I know my dad didn't make a lot of money. We bought a house in New Jersey, and I think he bought one in 1981 or something. And he told me interest rates were like 14 or 15% or something like that back then.
Yeah,
Pretty high.
that's I was gonna say 1981 wasn't necessarily the good old days.
You
They
could
didn't
hear,
have 2% interest rates or 3%.
he literally
They
told
were
me
up to
like
14.
the day he was going to buy the house or put the down payment or whatever from the bank, he had to like, they said, tomorrow we're no longer issuing mortgages because the rates are too high. So you have to come and like, the bank was closing. So he's like, slip the application under the door and we can get it in time type of thing. Which is kind of crazy. I can't imagine. I mean, my interest rate's now like a I don't know, 3.125 or something like that, which is awesome. But was there ever a time when, I remember like my grandparents, hey, you could be a policeman or a nurse or something, and you could afford to have a house in that neighborhood, or you could afford that apartment. I mean, I hear that all the time, but is that ever true? I mean, I know now it's
No,
pretty hard to do.
I think that's true. Coming out of probably the best time for all of this, and this is where the homeownership rate began to rise, was coming out of World War II. And at that point, obviously people were talking about we need to house the people that are coming home from the war and so forth and so on. Great baby boom, all the other kinds of things that were involved in that. But that's when FHA really took off, and you could get a mortgage and you could do it. That's when you could S&Ls were the primary source of lending, and those were the good old days, if you will, in terms of people being able to afford to buy a house, and land costs had not gone up. A whole series of things hadn't happened, and so probably average person, we're talking about workforce housing nowadays,
Mhm.
policemen, firemen, etc. They were able to do that. They could go out to the suburbs. They could buy a house. Houses were built. Levittown,
Yeah.
if you remember,
Yeah.
those
Yeah.
kinds of things were happening. So those were good days, and we're building 2 million units a year, and that did happen, 1.5 million to 2 million. Uh, but after a while, uh, a variety of things happened. First of all, we had our first financial crisis, which was the S&L crisis, um, and because they were the source of money. But as interest rates rose, and you're really getting a bit of a history lesson here if you
I
want
love it. Yeah. I love
it.
it.
So as interest rates rose, the problem with the savings and loan model is they were basically borrowing from all of the people that were putting their deposits in, and so they were borrowing low. They were in those days, they would borrow, basically give all the people with their savings accounts 3%. They would put out mortgages at 5%, and there was a 2% spread, and that's how they were survived.
Mhm.
But then all of a sudden, and there was something called Regulation Q, which said that the S&Ls could pay a higher amount for savings, so they could attract more savings compared to banks.
Mhm.
But then what happened is we got into a period of inflation, and that was, the early 80s. That's when your dad was buying that house. And all of a sudden, mortgage rates went from 5% to 14%. But what happened with that is all those mortgages that they've issued, where they were borrowing money at 3% and basically they were getting 5%,
Mhm.
then all of a sudden they were having to pay for the money that they were going to get to issue the next mortgage more than the 5%, and they had a model that didn't work anymore.
Yeah.
They were what was called borrowing long and lending short, and all of a sudden it came collapsing down. And so many S&Ls went out of business. And the real question was, where was the money going to come from? That's when I was at the President's Commission on Housing in the early 1980s. I was the staff director. And we said, we've got to do something about this. And the answer was
Mhm.
mortgage-backed securities. And that's where Freddie Mac and Fannie Mae came in. And in essence, figured out a way that what they could do is there were some investors that wanted to get long-term money. If they could package them and put them together as a mortgage-backed security, then Freddie Mac and Fannie Mae would no longer be borrowing short and lending long, but they would be, in essence, getting money from investors to pay for those mortgages, and they would be able to put together a package of mortgage-backed security, and then for the life of that mortgage, they could continue a 30-rate fixed-rate mortgage because now you had investors that were going to get that over the life, and then they could take that mortgage-backed security and trade it and use it and sell it and do all kinds of things that they wanted to do. And so basically, the S&Ls and their business went away, and Fannie Mae and Freddie Mac became the kind of major lender doing 40-50% of the market, if you will. And that was kind of the answer to the mortgage problem. But then what happened is we got too loose in our mortgage standards.
Mhm.
Fannie and Freddie got a little bit loose, but the private sector got very, very loose. And then they, started putting together mortgages that were no longer backed by real credit. And that's why we had the Great Recession, and that came crashing down. Freddie and Fannie went into receivership, um, and now they're basically public utilities.
That's right. Yeah.
But that system's actually working pretty well. I wouldn't be surprised to see the Biden administration take them out of conservatorship and make them public utilities, because that's basically the way they're operating now. They've
Yeah.
been in conservatorship for 12 years, but
That's a great, I mean, I could listen to you all day. You should be a professor. Kidding. So the good old days now, I mean, they're not, are we ever going to have the good old days again? And like, not the same way. I guess that's kind of why we're having people trying their best to kind of address these issues, right? It's got to be some sort of creative kind of out of the box thinking that's not something that we haven't done before, right?
yeah. Well, yeah, two levels. Number one, I think that the government has a role, and Fannie and Freddie have to continue doing what they're doing. Um, I think that you'll see the Biden administration, whether passes or not remains to be seen, saying let's come up with a program to help provide down payments for people, so that they're able to buy mortgages. Let's continue to focus on affordable housing. It's amazing how what nonprofits, private sector, cities, and communities are doing to try to address the problem. The problem is it's just so great
Mm.
at this particular point in time. But at some point we'll catch up. And the innovation, as I talked about earlier, is happening one community time, one step at a time, whether it's new construction methods to try to be more effective in terms of the way we build, or financial methods like Rhino, or rent to own programs, or other ways to kind of encourage people to do that. Or most importantly, state and local governments removing the barriers and making it easier for the private sector to build the housing that they would like to do. Then eventually we're going to be able to build more housing, and that burden will dip away. Right now, household formation's slowing down again because of the pandemic. That maybe is not such a bad thing. Let's do a little catch up.
Um, what would you recommend to someone who's trying to get to make a change, who sees or maybe who wants to be, follow in your footsteps, but also somebody who's looking to try to address the affordability issue? Is there something they should do? I know it's a big question, but is it?
Well, I think it's a great question, but I think if it's an individual, what they need to do is look around in their community. First of all, they have to understand the housing market, and they have to understand, um, what's going on in that community. But there just are lots of opportunities. Let me give you an illustration. This again is a California-based one, but it's happening all over the country now.
Mm,
One of the trends now is called ADUs,
yep.
accessory dwelling units.
Yep.
And it's becoming quite popular in California, but Austin, one of our Ivory Prize winners was from Austin, and they changed the laws to make accessory dwelling units work in Austin, and made a big difference. They were called alley flats,
Hmm.
where they would build an accessory dwelling unit next to the alley
Yeah.
that would run between sort of two major streets. And so those accessory dwelling units, for your listeners, are maybe a 1,000 square foot unit, but it's a unit built on an existing piece of property with another existing home.
Yeah. Like some people call it like an in-law unit or
Right.
something like that. Yeah.
So you've heard of Stanford,
Yeah.
and
Yes. I live right
and
by Stanford.
you live right by Stanford, okay? And one of the things that happened with respect to Stanford is they're dealing with artificial intelligence and how can we use computers.
Sounds like
And
Stanford.
a bright group of people from Stanford started a company called Symbian.
Oh, cool.
This was an Ivory Prize winner from the private sector last year, but it's an illustration of somebody that's making a difference. And what Symbian did is they said, let's go into local governments in California and let's automate their regulations, if you will, related to what's involved in building an accessory dwelling unit. And we'll partner with this local government so that, for somebody to have to take 4 months to figure out what's involved in doing an ADU, they can just go on the computer and figure out where it's possible, or if they have a house and they want to do it, whether it's legal and how they can do it and what's involved in that. And Symbian's been highly effective at making a difference, working with local governments in the state of California, uh, to try to help increase the number of accessory dwelling units by dealing with the regulations on the regulatory reform side. So it's been fascinating. But that's what, that's linking computer technology with a real world problem with another real world solution, community based accessory dwelling units, and then figuring out how to make it happen.
That's pretty amazing. Yeah, I would have never never thought of that. Well, we're gonna have a part two at some point because I have a lot more questions to you. But right now, we got to get to the next portion of our show. It's called the hot seat. Are you ready, Kent? Are you ready, Kent?
I'm ready.
Any books you recommend? Specific, I guess on housing. I'm sure you've written like probably 30 of them, but have you any you recommend any that you recommend for someone maybe who doesn't really know much about this but is really interested in it?
I have to be a little bit careful about this, but if you want to look at housing policy, I did
You wrote the
write a
book on
book.
it.
You're back, yes, I did. So I'm not trying to sell my book, if you will, but it's I'd be delighted. It was published in the early '90s. And it's called Housing Policy, and it's related to achieving common ground and how we can work together in terms of doing that. It's Harvard Press, and I'd certainly be willing to recommend that.
All right.
Um, I also think, in terms of grappling with this, probably if somebody's really interested in it, the Turner Institute up at Berkeley has just done a recent study which is focusing on the housing ladder
Mm-hmm.
and how you can try to grapple with these from a policy point of view. Carol Galanti, who is the FHA commissioner, has helped do this along with a lot of other people, and that's a super book in terms of what's involved, in terms of housing policy. The Urban Institute has a lot of really good publications. Lori Goodman, who's a member of the advisory board for the Ivory Prize for Housing Affordability, heads up a Housing Finance Institute, and they've got a dozen. I would go to their website and look for the Center for Housing Finance at the Urban Institute, which is directed by Lori Goodman, and they've got all kinds of papers in terms of how to grapple with this at this particular point in time. And then the other place is the Harvard Joint Center for Housing Studies. Chris Herbert is the director of that, and they've got a number of working papers. And every year they put out a paper on the state of the nation's housing, which really takes the demographics and what's happening. I don't know if you've seen that or not, Chris, but it's a great publication, which is really very practical and talks about the demographics, and then they've automated some of those demographics. So the state of the nation's housing policy from the Harvard Joint Center for Housing Studies. It's great.
All right. Awesome. How about, do you listen to any podcasts? Are there any good housing podcasts?
Just the ones by Chris Papa, but
There you go. I'll take it. Next question. What do you like to do outside of work?
I like to ski.
Well,
I like to water ski.
oh, really? Cool.
I also like to work out. I had to have a back operation a while back, so I do the elliptical for 35 minutes every day,
Oh, wow.
and
Okay.
I do that. But I'm still able to ski and water ski, so those are good things. So that's what I do, and as far as the outdoor side of my life.
Nice. What do you?
And then I have 5 children and 16 grandchildren.
Oh, geez.
So that, to be honest, is probably the most important part of what I like to do.
That's awesome. What?
And a wonderful wife, by the way.
Oh,
Chris.
yeah. Don't forget her.
Right,
We'll edit out that pause.
right.
What advice would you give to your 20-year-old self?
To my 20-year-old self, I would probably, first of all, I would say, you don't have to do it all at once. One of the things that I've really learned over time is that one step usually leads to another, usually leads to another. So when you're trying to decide what you want to do something which will allow you to have the greatest future options. Back to my illustration. I when I thought I was interested. Maybe I wanted to be a professor. Maybe I wanted to do that. But I decided I wanted to do something, and that's where I got my master's in public administration, which had multiple jobs that I could do when I got out. That led me to getting a PhD. It was not necessarily my plan at the outset to do that, but that led to that. When I was at MIT, I got the opportunity to work for the city of Boston at the Boston Redevelopment Authority. And there worked with another colleague, and we developed housing policy for the city of Boston. Next opportunity was I heard about the White House Fellows Program, and I did that.
Yeah.
And it just sort of was one evolution after another, and you don't have to do it all at once. The second advice, which is totally different than when I was 20, but it's what my kids and grandchildren are grappling with now, is it's to believe in yourself, recognize that education is important,
Mhm.
but innovation is going to be especially important because it is a changing world. It's like what we've been talking about in terms of the way the world of housing affordability is changing and all of the innovation that is going on. So you need to prepare yourself to be adaptable and flexible and to innovate. And so but what you do want to do is you want to develop some real skills.
Mhm.
I've so friends and some kids, mentoring, they're at school now and they say, I want to go into philosophy. And I say, that's great. Or I want to go into international affairs. And I would say, that's nice. What are you going to do? Where are you going to work?
Yeah.
You have to have some marketable skills. And today, obviously, computers and data and analysis was there. Economics is another area. Finance is another area. But you have to have some marketable skills, which then you can apply in creative, innovative ways. So you have to recognize you don't have to do it all at once. And if one thing doesn't work, then you take advantage. And it's just amazing how many people are doing startups nowadays.
Yeah.
You know that out in California, but that's a third of our economy. And a lot of our Ivory Prize winners are startups
Mhm.
that are doing interesting things.
Nice. Now, there's a lot of people on here that are, I'm a recruiter, right? So I work with housing firms and help them build their companies and stuff. Like, I'm sure there's people listening trying to find new opportunities, career opportunities. I'm sure you've hired a lot of people in your day and have been hired. What do you look for? What qualities, whether you mentioned some in your last answer, but look, maybe some soft skills that you look for in people when you hire them?
Um, First of all, I am looking for a skill set. So people have to be able to say, I'm good at finance, I'm good at accounting, I'm good at uh, human resource skills, whatever it is. You have to have a skill set that you're looking for doing that. Um, in the building field, there's some great, the questions, construction design, getting some skills in terms of how you build a house or what's involved in those kinds of things. Secondly, I'm looking for somebody who is going to be honest, is going to be straightforward, and who I can connect with in that interview. And I'm looking for them to look to understand what I'm looking for.
Yeah.
and to try to, and that's a dialogue. And that's what I always am looking for the dialogue. If if you were in my seat, what would you do?
Yeah.
And to try to sort of see where they're coming from and what things are important to them. And then the third thing is I am looking for people who um, can get along with folks. Uh, we've become a little bit too nasty from my perspective in terms of the way we deal with each other. And I'm not looking for a tough guy. I'm looking for somebody that does want to try to get along with other people and is willing to compromise and is looking for common ground.
That's probably the best answer I've ever received for that question. Well, Kent Colton, president of the Colton Housing Group, it has been an absolute pleasure speaking with you. Thank you for coming on the podcast.
Thank you for listening to Beyond the Resume, a Jackson Lucas podcast where we take a deep dive into the career journeys of some of the top minds in real estate and equip you with the knowledge to move forward in your path towards the success you've envisioned. Make sure to like, share, and subscribe to Beyond the Resume. We're grateful for your support. All episodes of Beyond the Resume are brought to you by Jackson Lucas, building inclusive and diverse businesses through talent acquisition. Visit us at jacksonlucas.com